Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update and also your 2024 update the last week of January. So what we basically have, as you can see, this is going to be the year of the fives. 5 will be the handle, the first number on the mortgage rates. Remember, they got as high as 8. Now they've been dipping down. I expect by mid-year it's going to get down to 5, maybe 5.5, 5.99, but we'll definitely probably see a 5 in front of it. Second, 5.5 million in home sales. You know, we topped over 6 million a couple years ago and went all the way down to 4 million last year. They expect it now to be 5 to 5.5 million. And third, as you can see, will be the approximate home price appreciation. There's still a lot of people out there that feel prices are going to go down. In actuality, you know, they're going to continue to go up because of lack of inventory out there, even though rates are a little bit higher than what they were, but expect those to go down. Speaking of that, let's look at the mortgage rates. You know, you can see the mortgage rates decreased to the lowest level since May of 2023. You can see they peaked at 7.79. They're down to 6.6. And like I said, mid-year, you can definitely expect them to get down to maybe, you know, 5.75 in the high fives somewhere. You can see that over 78% of the mortgage rates are less than 5%. Again, we always talked about this is what's kind of keeping homes from coming on the market, because almost 80% of the people have less than 5% mortgage rates, and actually about almost 60% of the people have 4% or under. So that's what's locking inventory down. And so what will happen as rates come down, someone with a 4% interest rate doesn't want to go up to 7.5, but if they can go up to 5.5, they'll sit there and go, yeah, I'll sell, and it will free up more inventory and people won't feel so locked into their home. You can see what they talk about, lock-in rates. Look at the limited new inventory, and you can see if you've got basically a 3 to 4 or less than 3% with the interest rates the way they are today, you're either not selling or probably not selling. And 4 to 5, you must think before selling. Well, now if rates go down into the 5s, you're going to see that open up quite a bit. And here's the top 3 reasons why buyers have paused their decision. It's all about the interest rates. Mortgage rates over 72% are the reason that one of the top 3 reasons that they're pausing their buying decision. And then inventory over 34% and affordability over 17%. And they're all interconnected because obviously as mortgage rates are high, as you start to see them go down, then people will not feel as locked into their rate and you'll start to see more inventory go up. Now the affordability, obviously prices will probably go up. We talked about when rates go down, prices go up. But as mortgage rates go down, it becomes more affordable because people are paying less interest obviously for their home. So even though we might see prices go up a little bit, they'll probably still be more affordable as interest rates go down. You can see that what's the spread between the 10-year yield and the spread above it, the 10-year Treasury. Well, you know, the delta on an average has basically been 2.79 is where it's at right now. So if you basically put it at 4.13 and 2.79, that's how we get to almost 7% interest rates. And you can see looking at for the last 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury, except in the last few years, because you see the current spread is 2.79. Well, look at this next graph. The spread on the average over the last years has been 1.72. If you add that to the 4.13, you can see mortgage rates should really be 5.85 now. So why is the yield, why is basically the delta higher? Because the Federal Reserve has artificially kept interest rates high to keep inflation down. If they would have just run like they do with the 10-year Treasury, they'd be 5.85. So that's why we anticipate them going down. So you can see the mortgage rate projections. You know, the fourth quarter, you know, the third and fourth quarter of 2024, most people are expecting 6%, 5.8, so somewhere between 5.5 and 6. And once they get below 6, this is when really the buyers come out. A lot of new home builders are buying down the rate, and they found that once they get at 6% or below, the buyers are now more comfortable purchasing, where they're not at 7, 7.5, and certainly not 8. And you can see in this slide on the 49-year average of the monthly price movement. That's why if you're thinking about selling the next 4 months, you should be getting your home ready, because the most appreciation we've had over the last 49 years is going to be in the next 4 months, March, April, May, and June. And the reason why is because a lot of people wait till the summer to put their home on the market, yet the buyers are out there looking. So there's a lack of inventory, lack of supply, a lot of demand, and so that's why we see the most price movement upward in these next 4 months. Also, on the other side of the coin, if you're a buyer, you might want to get out in the market now and not 4 months from now after we've seen more appreciation. And you can see the 49-year average versus the 2023 basically has followed along with the yearly average, the 49-year average, and basically, so every year, that's why these numbers look like they do. Home price forecast, almost everyone across the board is expecting home prices to go up. We actually think, the latest ones, this is as of November, the latest ones, though I don't have a graph for it, are showing more, everyone's thinking more like 5%. There's hardly anybody on the negative mode now, unlike a few months ago when they were. Estimated home price performance, you can see they expect 5.92% in 2023 as it ends up, then going 2, 3, 4, up to 4% in 2028. I think almost across the board we're going to see inflationary appreciation. So if inflation's 5%, I think we'll see 5% appreciation on the homes. There's a lot of information here, and the market is very fluid. So if you need more information, specifically, hey, whether I should be buying right now, whether I should be selling, reach out and give me a call, and let us be your advisor and your consultant, just to get you the pieces of the puzzle that you need. We can give you a few pieces of the puzzle. Most of them are personal, but you need the key pieces of the puzzle to help you make a decision. So give me a call, Joe Kehrig, the Kehrig Real Estate Team, 925-487-6838, or drop me an email at joe@kehrigteam.com, or visit our website to meet the whole team and see all the homes that we have on the market, www.kehrigteam.com. We'll see you next week.